Good morning, it's Market Day Report. We're so glad you're with us for the final trading day of the week. Let's jump into the markets. Overnight action. What happened? We'll start with the corn market moving higher. And this is moving higher after a lower close yesterday. And I say a lower close, we had that front month September settled in higher territory. But overnight, 378 and 3/4, up 3 3/4 on the old crop, while December holding that $4 range, 401, up 3 3/4 cents. Also overnight, soybean trade higher with November gaining 7 3/4, 1036 1/4. What about soy meal? Well, contracts were higher across the board with bean oil contracts higher, but notice all of those contracts in the 52-cent range. Wheat market, well, wheat was higher. Chicago up 3 1/4, 506 3/4. Hard red, which has been lower now for 3 straight sessions, moving higher overnight, 507 3/4, up 3 1/2. Spring wheat contracts were mostly higher as well. And to the cotton market, which slipped 28 points, 67.40. All right, let's go to Springfield, Missouri. President, Midwest Market Solutions is Brian Hoops. All right, Brian, we're rolling out the Friday here. What are you watching?
Hey, good morning, Tony. Well, a lot of talk from clients that they really don't believe this USDA number for the corn yield. And so what that's done is nobody wants to sell corn right now. And we're seeing a little bounce in the corn market as a result. And you look at some of those forecasts into the end of the month of August, a little bit warmer, a little bit drier than previous models. Maybe that curtails those yields further in corn and soybeans. So we're seeing a little bounce overnight as a result. Now, a lot of producers were interested in selling soybeans off the combine, generating some cash flow, also looking at not having to store the soybean crop, and that generates, not only cash, but also bin space so that they can store the corn crop and maybe sit on it for a while and see if those yields start to come down from this really lofty level that the USDA has forecast. CONAB overnight did increase their estimate of the Brazil's corn crop. That'll no doubt come into play as they'll continue to be strong exporters here for the next several weeks. That's going to curtail some of our old crop corn exports. In fact, we saw yesterday morning, the USDA announced that they're rolling sales from this old crop into the new crop. Part of that has to do because of the end of the marketing year, but a big part of it is because CONAB and Brazil are also selling a lot of corn into the world marketplace and hurting our export business for right now. Almost all of our business that we've been announcing has come in the form of a new crop marketing season. So patterns been for grains to have a strong Thursday, Friday type session, and then maybe end softer on Friday ahead of the weekend, trade lower Sunday night. That's the 4-week pattern or so that we've been trading in. And we'll see if we can break that pattern or if we're going to continue to follow that same trajectory where we trade a little stronger early in the session, but by the end of the Friday session, we start to weaken up.
All right, that's a quick look at what's happening on the row crop side. How about we come back and we'll pick up the conversation on the protein side? That's right around the corner. This is Market Day Report. So interesting developments in cash trade already. With the pullback yesterday, packers were lowering their bids, but they didn't find any takers in the South on that, so we'll have to wait and see what happens today. But again, cash trade will help drive what's happening in the live cattle market. A bit of a spook yesterday as somebody thought that the Mexican border is reopening, or at least that's the best we can find for why the market turned south. August down 210, 233.45, 265 lower on the October at 226.77. Now we do get a cattle on feed report. I believe that's a week from today. My days are kind of running together. But feeders in the session yesterday down 577 at 340.10, and September at 340.77 was 585 lower. Let's touch on the hogs as well. Hogs have had a rough go here this week, down 3 consecutive sessions and that October now at 88.90, down $1.87. Let's go back to Springfield, Missouri. President, Midwest Market Solutions, it's Brian Hoops. All right, Brian, what are you watching here?
Well, yeah, you're right about the possibility of the border reopening. There is a press conference slated for this morning, 11:30 Central Time. Texas Governor Abbott and Brooke Rollins, Ag Secretary, are speaking. Now, it was rumored yesterday that it is going to be about the border reopening. Some of those rumors have kind of backed off this morning, and they're talking about maybe this is a process of how the border will reopen and maybe when it will reopen eventually in the future, not that it's going to be opened right away. So a lot of this was traded yesterday in the sell-off, I think. And we'll have hopefully a little bit more clarity what the USDA is thinking, because it certainly makes a major decision as far as how these producers are marketing their livestock. As you mentioned, very little cash cattle trade in the Southern Plains. 233 is the bids. That's down a couple dollars from a week ago, and there's just no takers at that price level. Trade in the North has been generally $3 to $5 better on a dress basis. Numbers a little tighter in the North, so you would expect a little stronger market there. But you would think we'll see some cash trade developing today, and it probably going to be in that Southern Plains at least steady, if not $2 higher when it's all said and done. So it should be an interesting session. You mentioned the cattle and feed report a week from today. The expectations we have are fairly bullish. Placements could be down 10, 11% from a year ago when they're announced next Friday afternoon.
All right, so we get the cattle on feed report. That's one we're teeing up. We also have some other reports that come out along the way, some from like EIA, if you will. And when we look at the nat gas, we've really seen the stocks of natural gas increasing, putting pressure in the market. Have you been watching the rest of that energy sector?
Yeah, absolutely. The ethanol production has been very strong, and so the USDA did increase their ethanol production forecast, and rightfully so, because we've been using a lot of corn to produce that ethanol. If we could get E15 year-round mandated, that would be a huge win for a U.S. farmer, and I think it certainly needs to be done. The crude oil market has one that has had a buildup of stocks recently until this week's report. Then we saw, another one, another buildup, and it just kind of tells us that we have a lot more inventory around. We're producing a lot of product, and if we didn't have a war premium, we may be trading into the 50s instead of this mid-60 range. And natural gas, yeah, it's been a tough market. We're building up stocks there as well, and the price has reflected that with some contract lows just recently here this week being scored.
All right, Brian Hoops, Midwest Market Solutions. Have a great weekend. And speaking of the weekend, do you do chores over the weekend?